look at the hideous action in the stock of Nvidia today, you'd think CEO Jensen Huang offered nothing special at his CES keynote last night, or maybe even that he canceled it. But sometimes the stock doesn't tell the whole story, particularly this stock. First of all, the whole tech sector rolled over today, even as other parts of the market like healthcare, the banks, they held up well. Second, I'd argue that tech stocks were victims of the flailing 10-year treasury, as I said at the top of the show. Finally, this stock was up huge going into Jensen's speech last night at its highs. It was shocking that Nvidia managed to open up strongly this morning, and it was sailing. It only fell from those levels because the yield on the 10-year treasury spiked. Listen, I'm a stock guy, not a tech guy, not a health guy, and not a bank guy, but I am what's called a generalist. I cover many different industries and many different companies. But some stocks I follow more closely than others, stocks like Nvidia. That means I know Nvidia's capabilities, and as someone who knows about the company, I did find last night's speech pretty darn dazzling. See, last night Jensen took a leap to go much deeper with physical AI, including making humanoid robots and taking autonomous driving to the next level. As Jensen said, quote, everything that moves from cars and trucks to factories and warehouses will be robotic and embodied by AI, end quote. To me, that sounds like the agentic economy, where we have digital agents that can do all sorts of things for us, and it's all Nvidia. The world will never be the same if this happens, and after last night, I think it's happening much sooner than expected. That was the takeaway. Jensen talked about the possibly relevant AI PC, something that's been considered a bust. He mentioned several uses for Apple's Vision Pro for healthcare and gaming, another alleged bust. Plus, there are all new clients like Toyota, that may want to build out a network using a supercomputer brain in one location and then a brain on board. I know that just sounds like a press release, but if Toyota, a well-capitalized company, decides to build out a Tesla-like autonomous driving system, it's going to have to buy hundreds of thousands of NVIDIA chips. That's good for business. Very additive. Now, there are always people, plenty of people actually, who own Nvidia for the long term, like the trust does. They should be gratified by all these very important announcements. But there's also a huge group of people who own Nvidia because it goes up, often by a lot. And the stock went nuts going into and immediately after Jensen's speech. These people, many of whom buy call options, not common stock, don't know enough about the company to stay in it when the stock starts selling off. I'm sure they didn't watch the keynote or read the blogs, and they're just in it because of the momentum. When the momentum turns, they turn too. Sell. To me, this is business as usual, people. While I may not know all the exciting specs that Jensen talked about, as I see it, he assured you that the new industrial revolution is alive and well and coming to you in a very short time. In my eyes, Nvidia stock was brought down not by anything lacking at CES, but because there was too much hot money in the stock. And these kinds of fellow travelers are your worst enemy if you're a shareholder. This decline had nothing to do with the specs from Blackwell or any of NVIDIA's other chips. I thought NVIDIA died a few years ago. But the company NVIDIA, it is alive and well with a stock that's had this kind of move over and over again. It just stands out because the company now has $3.4 trillion market capitalization, slightly below Apple. And to some degree, this morning at $153 stock, it was priced for perfection. It closed at $140. The thing is, last night, Jensen actually gave us perfection. And that's why NVIDIA actually opened up, but other forces intervened and crushed the stock. We don't know what the employment number will look like on Friday, but if it's at all soft, today's sellers will be kicking themselves. If you don't already own it, you can think about buying some now, maybe nicely below its all-time high, and wait until the labor report to buy more. If it comes in hot, you will get a chance to buy this stock lower, maybe much lower. But understand one thing: the keynote dazzled. The new projects are way ahead of any other company, and this new industrial revolution belongs to NVIDIA. That doesn't mean the stock can't go down. It just means that you can buy happily by the inevitable pullbacks, although when they do happen, remember, they tend to be sizable and brought about by scared shareholders who aren't sure exactly what NVIDIA makes, other than sparkling leather jackets and mini Jensens. I like to say there's always a bull market somewhere. Promise I'll find it just for you right here at Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
We examine Nvidia's chart in more detail below and apply technical analysis to pinpoint important price points to look for in early January. Nvidia shares have been trading in a falling channel since hitting their record high in late November. The price has repeatedly tagged the upper and lower trend lines of the pattern. Although the move happened on weak end-of-year share turnover, the stock more recently encountered selling pressure close to the channel's top trend line and 50-day moving average, MA. When the Relative Strength Index, RSI, drops below 50, It indicates a little adverse price momentum for the stock at the beginning of 2025. As the first quarter begins, let's examine the main levels of support and resistance on Nvidia's chart that investors might be watching. The first level to keep an eye on is around $130, where the shares might find support close to a trend line that joins the December swing low and the well-known August swing high. The shares may break below the lower trend line of the declining channel and retest lower support at $115 if they close decisively below this significant technical milestone. Currently trading just below the rising 200-day MA, this position is expected to draw purchasing attention in the vicinity of a horizontal line, connecting a number of similar price points from May to October of last year. Investors should first keep an eye on the $140 region if the price moves higher than its present levels. In this area, the shares can encounter resistance close to the upper trend line of the descending channel, which also happens to be in close proximity to the stock's peak in June 2024. If you buy over this level, the shares might rise to about $150. Those who purchased the recent retracement may try to lock in profits in this region close to a sequence of price movements that are located just below the stock's all-time high. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Nvidia price target's 200. Good morning, Dan. Let's talk robotics and autonomous technology. You say in your talking points or your review of the speech, that alone represents another $1 trillion of incremental market opportunity that Nvidia can now tap into over the coming years. How do you get to that number, and how do you derive the value you are for Nvidia from it?
Yeah, I mean, look, to me, I think Jensen laid out the strategic vision for the coming years. When we look at robotics, autonomous, I mean, I believe ultimately those are going to be some of the biggest use cases of AI. And I think what you saw from NVIDIA last night is they're not just sort of going to be a provider. They're going to play a huge role in this sort of vision. And obviously, Tesla on the autonomous side continues to be front and center. I think this is the next step. I think this is a snapshot of the future. And you look at it incrementally, you go out the next few years, I think Street's underestimating growth by 25, 30%, which is why I think not just $4 trillion, you could be looking at $5 trillion market cap.
Underestimating growth by 30%. What is it? Is it robotics? What's being underestimated, so to speak, in terms of the growth for this company?
I think one, it's Blackwell, just overall from a demand perspective. We think 15-1 demand to supply in terms of what we see. I think when you look at robotics and autonomous, given the market opportunity, that could ultimately be 15-20% of what I view as disruptive technology. I mean, that could be an incremental 20-25% just to the top line over the next, call it 2-3 years. I think that to me was the sort of watershed moment last night. It's Jensen laying out NVIDIA. It's not just about Blackwell chips, the new oil gold. It's about where this is all going. And we believe autonomous and robotics, that's a huge part of the fourth industrial revolution.
Right. So what does a ChatGPT moment in robotics look like then, Dan? What does that mean?
I think physical AI. I mean, we've talked about from Robotaxi Day in October. I think we're going to be looking next 2-3 years. Robotics is not just going to be from CES. It's going to be real. And I think it's something that's going to play out in factories. It's going to play out in consumers and households. And I think a year from now, we start to go more advanced prototypes to something that's going to become a reality. And I think that's the key here, is that we are still in the early days of the AI revolution. And there's only really one player. I mean, it's NVIDIA's world. Everyone else is paying rent. That was a flex the muscles moment from The Godfather last night.
What about what I was just talking about, Dan, which is higher yields and the fact that all those stocks are down today? I know you're excited about the fundamentals and the innovation here, but does it make you question valuations when we are seeing a rate move like this on some of those ideas?
No, look, and that's the push and pull, and I get it. But my view, Sarah, is that we have $2 trillion of AI capex next 3 years. And even when you look at tech, look at Microsoft just going to 80, from 44, basically doubling their capex. You look at numbers, you could say valuation, but I think it goes back to I think earnings and ultimately top line growth for tech is being massively underestimated into the next year or two. And that's where the growth is. This revolution is not going to be stopped in a 10, 20 bit move on the 10-year.
As if their 171% 2024 gain wasn't enough, by the end of January, Nvidia's stock was up almost 9%. This exceeded the year-to-date returns of the S&P 500 by over 8 percentage points. Many investors are likely asking how long the stock can continue to rise so quickly with this incredible momentum. Even though it is impossible to predict with certainty how high the graphics processing unit, GPU, specialist stock will rise in the upcoming months, investors nevertheless pause to think about whether the stock is appealing at its current price. After all, the short-term fluctuations in the stock price are essentially meaningless to investors who plan to purchase and keep the stock for the long run. So, is it wise to purchase Nvidia stock at its current price? Or is anticipated business growth already factored into the stock's existing valuation? There's no denying that Nvidia's business is booming. Its most recent quarter saw revenue rocket to $35.1 billion, up 17% sequentially and 94% year-over-year. Data center revenue, which accounted for 88% of the quarter's total revenue, increased by 112% year-over-year, which was the main driver of this. Naturally, the seemingly insatiable demand for processing capacity to enable artificial intelligence, AI, technologies has been helping data center income. During the company's fiscal third quarter earnings call, Nvidia founder and CEO Jensen Huang declared, "The age of AI is in full steam, propelling a global shift to Nvidia computing." The technology has amazing tailwinds, such as businesses embracing AI in large numbers to improve workflows and even nations realizing that investing in AI is a vital component of their own technological infrastructure. The remarkable profitability is a result of this momentum. In the most recent quarter, Nvidia's net income was $19.3 billion, more than twice as much as the $9.2 billion it reported in the same quarter last year. Lastly, Nvidia is building a robust balance sheet as a result of this rapid expansion. Despite increasing its share repurchase spending, the corporation still has around $38.5 billion in cash, cash equivalents, and marketable securities. It spent $26 billion on share repurchases during the 9-month period that ended on October 27, 2024. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Dan, you were in that room with Jensen, right, at CES? What was like a rock concert you wrote, right?
Yeah, first row. I mean, that was like a rock concert. Look, I think it speaks to that's the vision. That's where it's all. I mean, just getting back from CES. I mean, it's all about AI, and it's really laying out not necessarily the next 3 to 6 months, but what does the next 5 years, 10 years look like in terms of robotics, autonomous. It doesn't happen without Godfather of AI, Jensen, Nvidia.
Why did the stock sell off?
Look, I mean, we could go back to quarters, right, where the stock sells off, bears come out, have a hibernation mode, stock goes to 100, then all of a sudden 2 months later back to all-time highs. I mean, my point is look at Apple. Apple sold to 190 at WWDC, when 250, 260. I just think these knee jerks it's easy to kind of get scared by them because they don't say anything about near-term demand. The reality is you come out of that more bullish rather than less bullish because of what that market opportunity means in terms of robotics, autonomous, and the future.
Dan, you're in that room. You know, I see Nvidia through the prism of the data we get on Yahoo Finance. Every single day, Dan, the millions of people that go to this Nvidia ticker page is through the roof. This is the most popular stock in the world, at least from my vantage point. When you're in that room at CES, do you feel that excitement?
Yeah.
What are people in that room? What did you hear from them on Nvidia this year?
The only thing that would compare would maybe be like at iPhone launch, Jobs, 2007.
Wow,
Like
really?
but I'm trying to give you like an example of like the feel where there's something different, there's something new, and that's why look, I get it. Like a lot of the bears that have missed every transformational tech stock the last 20 years, they'll become hyper focused on geopolitical tariffs, 10-year, 5%. Remember, I mean, these are
Oh, they're
bears.
slamming stocks, Dan. I mean, the 10-year and 5% earnings are going to
And
suck.
remember, these are bears. They hate Nasdaq at 3K, despise it at 20K. I mean, it would be like listening to a draft analysis that was super negative on Brady coming out of Michigan 2000 draft 6th round. I'm just trying to explain, like, that's all noise to me. I just focus on what does the future look like? What does AI revolution as it spreads, not just in names like, of course, Palantir, Salesforce, ServiceNow, the rest of the software. I think that's what it's about. I mean, I think what Jensen's laying out is this is early days. It is just the beginning of the revolution.
But what we're seeing, let me go back to the sell-off here. You know, I think it was, you know, investors, you know, they get worried. You know, they trade in and out of the stock. I think a lot of people that have invested in Nvidia only know the stock to go up generally. Did we get a taste of what it might be like for the first half of this year for Nvidia, where they're not going to be able to do enough to meet the really, really high expectations that they set, Dan? I mean, you know this. They set these expectations last year, given how many times they've squashed earnings and they've just continued to deliver on the tech front.
Actually, I don't think necessarily it's Nvidia because you could look at names like Palantir, Tesla, some of the sell-offs that we're seeing. I think broadly, we're just going to see some white knuckles in the next 6 months. Trump, headline risk, tariffs, 10-year maniacal, as it goes to 5%, what does it mean for Fed? And so I think we're going to see some of that. But look, my view is tech stocks are up 25% this year. I think Nvidia is well over $4 trillion along with Apple. I just think we're going into one of those periods where the bears, they're like, okay, well, we've missed out the last 2 years in our caves. Now we're going to come out. That's central casting. Coming out first week or two, wait for all the downgrades, fire in a crowded theater. But the reality is that you're not stopping $2 trillion of AI CapEx. See that? I just keep coming.
But this is when things start to become a little trickier. As of today, Nvidia's market capitalization is close to $3.7 trillion due to the increase in its stock price. Even though its cash balance and profits are great on their own, they are nothing compared to this amount. Additionally, take into account how this valuation compares to Nvidia's earnings over the last 12 months. The company is trading at 59 times earnings, which is a multiple that accounts for the company's expected sustained high earnings growth over the next 12 months as well as in the years to come. Naturally, Nvidia will most likely keep expanding at a remarkable rate in 2025. The business is facing significant tailwinds that are not expected to abate anytime soon. Investors should be aware of the cyclical nature of the semiconductor business, though. It's even more fiercely competitive. As an example, the chipmaker Intel used to be so dominant that it was hard for anyone to see the company going out of favor. However, over the past 5 years, shares have dropped 67% as Nvidia and other chipmakers have outperformed Intel in nearly every way. Furthermore, the corporation was unable to keep up with the rapid advancements in technology. Nvidia is constantly at risk of experiencing the same thing in the future. However, with Nvidia's dominance, it is doubtful that it would experience a devastating run of subpar performance like Intel did in the near future. Investors are probably facing a more modest risk in reality. For example, investors may begin to doubt Nvidia's premium valuation, and the stock may drop precipitously if the company's growth slows and its profit margins contract. Furthermore, the price may decline if there is even the remotest indication that enterprise AI spending is about to peak. Considering this, it could be wise to avoid investing in Nvidia stock. Although it's a fantastic firm, a high value might have factored in a large portion of its potential future expansion. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.